In this video, I will be showing you the best range market strategy that you can use in a range or consolidated market. You can profit even in a move that seems unpredictable and complicated to many traders. First, it's important to define the difference between a range market and a trend in general. There are two states of the market. The first is a range market or consolidation, when there is no clearly defined trend on the chart, and the second state is a trend market. As you can see, a trend has a clear movement in one of the directions, up or down, and if we have an uptrend, the price will rise with small pullbacks, then recover, and each time a new high will be set above the previous one. For example, here the chart has started to rise. We can mark the maximum. After that, there was a pullback. A new high above the previous one was formed, and so on. The graph has rolled back again. A new high has formed, which is higher than the previous high. Thus, you can easily distinguish a trend. Many traders find it easier to trade the trend because it is more predictable. We can see the overall movement of the chart and can trade in the direction the trend is going. There's even an expression, trend is our friend, but the problem is that the market is in consolidation most of the time in the second state, while it spends about 30% of the time in a trend. Most of the time it is like this, for example, when there is no clear trend and the tops are not increasing or decreasing the previous value. Consolidation looks like this. We have some point, then the chart goes down, then it goes up again. And at the same time, the previous high and low are not updated, they stand in the same place. So how can we use this and make even more profit on range charts than on trending charts? So when we see such consolidation and realize that the chart does not have a clear trend, we can apply support and resistance levels on it. We draw these lines along the local highs and lows we see on the chart. For example, we're getting a consolidation zone. We realize that we don't have a clear trend, and we put a resistance level at the first high, then at the second high. And also from below, we can put support levels. For example, we have this minimum here, and we have this minimum here. We put two levels of support on them. What are support and resistance levels? These are levels above which the price cannot break above for a certain amount of time. What does that mean? This means that there are pending orders from other traders at these price points, at these price values. In our case for Bitcoin, for example, at the price of 82,200, at the price of 82,500, there are pending orders of other traders to sell. As soon as the price starts to approach them, the chart bounces to the opposite side because orders are worked. Same with selling, for example, at 81,300 and 81,500. There are traders who benefit from buying at this price. And as soon as the price of this consolidation approaches the support levels, we will have a rebound upwards because pending buy orders will be worked. What will it look like in the end? How can we use this strategy? As soon as we see that there is no trend on the chart and it is in consolidation, we set our levels. And as soon as the next time the price approaches our level, for example, as here, the price has approached the resistance level, the chart goes down. The same situation here, where the price approaches the support level. As soon as the price touches the support level, we see a reverse upward movement because pending buy orders are worked. Further on the same chart, we see a similar situation. We again approach the resistance level and see that it touches this line, and we start opening a trade down. Here we are already locking in profits. And in fact, we may have even used this strategy several times during this chart. First time, second time, third, and fourth time. And every time, we would open trades down from this line. Every time the chart would clearly work out. Further, as you can see, there's another workout here, only already from the lower level. You need to realize that in modern trading, everything does not work clearly from any particular one drawn line. There are no clear lines of support and resistance. There are levels, some range, some support and resistance zones. The price may bounce from the first level or from the second level. And in this case, I recommend you to use a grid of pending orders. We can put a buy trade here, and below that, put another buy trade, and even lower, put the same trade. And there will be a grid of buy deals. And here, there will be a grid of sell deals. And even if, for example, the first line of the chart is passed, a deal will be open to buy A second deal to buy will be opened here. And after this movement, both of them will come out in plus. And like this, every time the chart will approach one of these zones, we can open trades in the opposite direction. Now let's talk about breakdowns. As you can see, right here, for example, price has started to move out of the level. This is what is known as a false breakdown. Usually support and resistance levels open either strictly up or strictly down on strong trends, but there are some false breakdowns. And as I have already said, it is best to trade them with a grid of pending orders here to sell and here to buy. In that case, even given that price didn't stop at the resistance we set, we would have another level here and another sell trade. And after the fall, they would all work out. As soon as the level opens, as in this case, for example, we see a clear trend. We can no longer use this strategy on this chart. Here we are already moving to trading on trends, indicators, strategies with indicators. So I have shown you such a simple strategy that will help you make profits on complex charts. Write your feedback in the comments, give me a like, and see you soon.